Good morning, everyone. Welcome to our Monday morning trading session. I trust everybody had an enjoyable weekend. Mine was a little bit too busy for my liking. We had the grandson come up on Saturday, which is always fun. He's 8 now, but oh my gosh, he's a going concern. It's all I could do to keep up with him. And then Saturday, we went down into Sunday, we went into the city to celebrate a birthday. And here we are Monday. The market's just opened up. Let's take a look here at the overnight. We'll take a look at the overnight. Oh, why don't we take a look at the overnight on the Raptor? Okay, you can see the market's fairly choppy. And where they left off last week looks like they closed around 42.46. And that's just about where we're taking over from, 42.46. There is another 2-day FOMC meeting this week, so chances are the market's not going to get committed to anything until Wednesday afternoon when the minutes are released. So we might expect a lot of sideways action here today. We're going to let the market just kind of settle in a little bit, give them a few minutes. Looks like we had a decent 4-arrow consolidation / macro pullback signal here. And in fact, what I may end up doing is going all in, all out on target. It's always difficult trading ranging markets. In fact, when the markets are ranging, it's best to just identify the range and let the market get outside of that range and prove that it can stay outside of the range. That's very often the most difficult thing to do. We'll see if we can't snag at least a couple of trades here this morning. Also following gold and crude oil. Gold giving us an interesting kind of look here on the eagle. Let's see if I shoot a trend line across the lows. Oh, we've breached it a little bit. Hard to say yet whether this is going to turn into a 4-arrow consolidate or 4-arrow, a rule of 3 counter trend signal, or if this is going to be a red bar buy. Currently, it's trying to be a red bar buy signal. But nothing that we can commit to at the moment. And crude oil also trying to put in a little bit of a rally, perhaps. Crude trading into, or trying to trade into the opening gap. We just had a first micro macro cross here, but you can see crude is also very, very choppy right now. And it looks like we've got some pretty serious resistance here around the 3150 area, which is just shy of where we're trading right now. So we'll keep a lookout on crude as well. We might see crude bounce and actually try to head lower again. It does seem, though, so long as we're range bound like this, that it may well just be a scalping market. Oh, although Trade Forecaster says we do have a little bit of a trend going on. All right, well, while things are quiet, excuse me for just a moment. I'm going to be right back. Oh, before I go, though, Jim says the advanced decline numbers, and seeing how we don't have much of a gap, decisively negative. We've only got about 700 on the buy and almost 2,000 on the sell. All right, folks, excuse me for just one moment. I will be right back. Okay, I'm back. What did I miss? Oh, not a whole lot. All right, you know what I might do is we might shoot the overnight range up here, just so we have an idea where we're trading. And it looks like we're up and at the top end of the trading range. Now, if you were inclined to be a more aggressive type of trader and you know that the market is moving sideways, you may attempt to buy and sell the top end of the trading range. Or pardon me, sell the top end of the trading range, buy the bottom end of the trading range. Now, the way that you would do this is through the use of limit orders. Now, I'm going to demonstrate this for you because we don't get this opportunity very much, and I have a feeling the market's going to go kind of sideways today. If it looks like we get something decent going on here, I'll definitely point it out to you. The market is actually looking a little bit more bullish now. All of a sudden, we've gotten a higher swing relative to this one, higher low. And we do have a chance at a second push on this entry. The problem is this area right here. Let's see what's going on with the other tools. Oh, they're actually looking a little bit bullish too. All right, let's try the Eagle trade with trend first. And here on the Raptor, I'm going to show you how to use your limit orders to buy the low. So we're going to use the buy limit. And with the trade manager, what we would use is we would actually change the orders on the trade manager. See, the trade manager order default is a stop order, but you can change it to a limit order or a stop limit if you choose. The primary difference between the limit and the stop limit is the stop limit will set how many ticks slippage you are prepared to accept. All right, so what we're doing here on the Raptor now, so we've tried the with trend trade on the Eagle. What we're going to do on the Raptor, so we know this is the top end, this is where the market is topping out. So some people will try to, when you're using your sell limit orders, some people will buy right on the number, some people will buy a tick or two early, some people will even try to buy a tick or two late, looking to get the best possible fill. Now, I have a feeling this market is going to continue to rally. We're getting some higher swing lows, which is definitely more bullish, but this is a good opportunity to show you, okay, the market's kind of stuck sideways. I'm going to try to sell the market if it gets within 2 ticks of this morning's high. And like vice versa, I will try to buy the market if it gets within 2 ticks of this morning's low. Now you're going to see in a moment here, the difficulty with using sell limit orders is where do you place your stop loss order? And maybe what I'll do is I'll use the swing, or I'll use the fixed tick, and we'll go, say, 10 ticks off of the high. Ooh, that's quite a bit. Usually when you're using limit orders, you try to really minimize your risk exposure. Okay, we'll try 5 ticks off of the high. So we'll offer up 5 ticks as a stop loss here on the top side where we're trying to sell, and then I'll reverse it and we'll go 5 ticks off of the low on a possible buy order. Let's see how the Eagle trade is doing. Yeah, you see the Eagle trade, no real commitment to the breakout just yet. Our stops are in the right spot. If we get the buyers recommitting now at this point, it's probably as good a time as any to start rolling our stops up. And what I should do is I should maybe even bring my break even down to here. So when we get back near the highs of the morning, it would roll the stops to break even. Now, once again, I'm just demoing this. This is not really a a really good trading signal. Yes, it is a red bar buy, but take a look at the context. Take a look at our filter here. Take a look at the patterns. No real defined trend trading into the top end of the trading range. There's a few things here that are saying, yeah, this is a little bit of a rough red bar buy signal, not our best opportunity. Here on crude oil, however, we're getting a possible green bar sell. Same kind of mess, more or less going sideways. You may want to let the ATR flip over before you commit to the trade. Problem with crude, of course, is trying to cover the trade. So I know from the logic counter, oh no, actually it won't flip the ATR over. Oh well, we're short. Should have canceled the order a little bit faster. All right, we're in now. If this bar continues lower, it will flip the ATR and essentially become our signal bar. And you can see here we retreated enough to hit our stop, and now we are long on the Raptor. So we're trading to the bottom end of the trading range, and what I need is I need a stop off of the low. I'll actually give them 10 ticks. There we go. That's how much I'll give them. We'll place a stop right there. Now notice my stops were displaying on the wrong side of my trade. So in order to fix that with the fixed tick strategy, you want to put a minus sign in front of the value. Jim says this is what he's been doing this morning. He's been buying the bottom end of the range, selling the top end of the range, and he's up 102 ticks so far. Well done. The problem with this type of strategy is that sooner or later the market's going to break out of the range, and then you could be in a little bit of trouble. Now, when it works great because look, we bought near the low. What's our profit already? Yeah, we're already up, $20, $30. It's much easier to find your profit objective. Okay, so we've hit our break-even trigger, and we've hit our first profit objective. We'll see if they won't run a little bit higher for us. So we've taken profit on one contract, running the other, and as they get closer to the high, I'll get more aggressive with my stop also, perhaps using the bar high low. Oh, well, there they go. They reversed and pulled back the 10 ticks, so stopped us out on the second position. But I think we did okay there. Yeah, we did all right. Not quite as well as if I had just gone all in, all out on both contracts. But it's tough to do. Because what you're trying to do is you're trying to second guess what the market's going to do. You're trying to say, oh, the market's going to reverse off this point and it will reverse off that point. And it may well do that, but it's very much, well, I guess I was going to say it's very much like gambling, where you're trying to guess what's going to happen next. All right, shall we try it again? So here's the top end of the trading range. The other thing you could do for this type of trade is just dial down the risk. Take a single. So we're going to sell near the top end of the range. And we're going to buy the bottom end of the range, and we're going to use our limit orders. Okay, now this is a soft edge buy. Oops, actually a little bit late on this. I should have gotten ready for it a little sooner. The soft edge buy, not the best soft edge buy, because normally with the soft edge buy on the Raptor, we'd like to see the band get really wide. The wider the bands, the better. And actually, let me see if Ryman's in the room today. Ryman, you're in the room. Ryman sent me an email asking about the double band. Let me just make sure it was you, Ryman. Okay. So Ryman, you're in the room, so if you don't mind, I'll just answer your questions right now, and please let me know. There you are. Yes, I know. Ryman says, I didn't send the email to you. No, I know. You sent it to Ray and to Ben, and Ben actually forwarded it to me. Now, on the dynamic equivolume bars, your first question regarding the dynamic equivolume bars, there's really nothing to adjust other than the brick size. So the brick size will have some determining factor on the width of your bars. Obviously, the longer the bar has to form, the wider it can get. Oops, and I need to get my stop back in here. There we go. Your second question was regarding these clouds. Now, unfortunately, we got a trade going on here at the moment, so we'll just see how this plays out, and then I will show you how you can do the double cloud on your Raptor. But in regards to the dynamic equivolume bars, they're automatic. They automatically size themselves. Oh, look at this. We may end up getting 2 bounces in a row. Now, why did my profit target not show up? Well, we'll put our profit target in. There we go. Oh, I see. It didn't display. All right, hold on 1 second here. Okay, if for whatever reason something ever goes wrong with your trade, and I'm not entirely sure what's going on here with my Raptor, you want to hit your flat everything button, and that's going to cancel everything. Okay, so while we have this, before I reload the trade manager, I'll show you really quick how you do the double cloud. Now, the double cloud is very simple. The Raptor comes loaded with the single cloud, but if you go to your indicators, and then you pull down here to all these indicators labeled IW, you're going to find one called IWRTS Raptor Cloud. If you double click on that, you're going to end up with two clouds in your assortment. So the first cloud, what I've done is I've changed the cloud size to 8. On the second cloud, I leave the default size of 12, but what you need to do is you need to change the colors. So you need to change the color of the band, and any color will do. And then you also need to remember to change the color of the band edge. Again, just choose a color that's going to be different from the original band so that you can distinguish between the two. And then when you have that done, just click apply and OK, and voila, you will have two bands on your chart. All right, so let me just do this real quick. Now what I've done also is I've removed the trade manager or the Trailblazer and reapplied it. Oops, I'm in the wrong account. One sec. When you make any changes, you first need to turn it off, then you need to turn it back on. There we go. All right, so that should all be working correctly now. All right, so a little bit of a breakdown through the bottom end of the trading range. Sellers, checking out what's down there to the downside. And so far, it doesn't seem like there's much going on. Still lots of overlapping sideways action, not anything that's easy to trade. Tony's asking, do we have a downside opening gap? Yes, but ever so slight. I think it was like a 5-tick gap or a 5-point gap or a 10-point gap. It wasn't huge, and it has since filled. So on the initial rally out of the open, so the market opens a little bit of a gap down. It has since rallied up into that gap, floundered a little bit, and now we're just kind of stuck going sideways. These are really difficult days when you get everything going sideways. It's just tough slogging. We might see a little bit of a break, as the morning progresses. Or if you hang out for the afternoon, you might see a little bit of a move there too, but I'm not sure we're going to see anything substantial today. So here's actually a first micro macro cross signal. Oh, I was just going to take it because I tell you, you can take those almost without thinking about them. And we'll see whether or not this one follows through to its target. There you go. So a little bit of follow through while the market is stuck within this bigger range. But here we are again near the top end of the trading range. Crude oil's trying to get a little bit more aggressive to the upside. So here's crude oil on the hawk, and we've just had a red bar buy signal here with some very nice follow through. This may turn out to be a first micro macro cross if in fact crude oil is thinking about pushing a little bit higher. Okay, the Nasdaq here on the top end of this morning's range now and into the median line on our support and resistance suite. Yeah, I agree, Jim. Jim says Fed Wednesday, everybody looking for that. Yeah, I think you're right. I think Monday, Tuesday, we're going to be in for, well, even Monday, Tuesday, Wednesday. I believe the minutes aren't released until the afternoon when we should see a lot of activity come back into the market. Okay, well, we got a little bit of a second push here on the Falcon signal. The signal has developed away from the trend line. Normally when we see the Falcon signals, they develop pushing off of the trend line. When they develop away from the trend line, you should always anticipate that they're going to try to retrace into the trend line. Now, if the momentum is strong, they obviously won't do that, but what you need to do is you need to set your trade in anticipation that the market may try to pull back. So to that end, you're going to want to run a much deeper stop. And the market seems thin this morning. Is the volume down? They hopped right over our order there. Now this is a very late entry into this signal. The signal originated right here, but I'm just putting it on so that you can see whether or not this market will actually pull back into this trend line now. And we have broken the top end of the trading range, so this may be our retest that we're looking for. Remember, when the market eventually does break out, we want to look for that retest and then that opportunity to buy. All right, so here they've pulled back into the trend line. Now let's see if they can come out with a buy signal. No, the trend line is already starting to turn over, so it looks like the choppiness is going to continue for a little while still. It's too bad the trend line changed here. That would have been a very nice late filter entry signal. All right, working on a possible trend change signal. We'll see whether we get another red bar through here and then another buy signal. That would be a trend change signal where the trend line goes from red to green. Okay, here's the red bar. Let's not dip too low. Let's get that buy signal now. Okay, so here come the buyers. They've recommitted. This is now going to be our buy signal. We've currently just had a green warning dot there for a second. It's waffling somewhat. And what I should do is I should roll my stops in underneath here. This is where the buyers have recommitted to the market. There we go. Come on now. Give me one more push and then I can start rolling my stops. Come on, buyers. Come on, get up there. See, sometimes you just need to tickle it a little bit with your mouse. Come on, get up there. All right, well, you see, again, we're going sideways. This may well turn out to be a test of the high here in a little bit of a limbo, but you see now how this is made a higher swing low relative to this one? That tells me I can roll my stop below there. There we go. So this is now the last chance on the part of the buyers to rally the market. If they can't rally it from here, then they may as well stop me out. No. And those buyers have got to dig in a hurry. So we have a higher swing low, lower swing high. Very, very sideways market. Yeah. Well, it wasn't the best signal because we formed away from the trend line, but you can see the principle. When you have a signal that is not bouncing off of the trend line, it's going to want to retreat into that trend line. So you need to allow for that. And unfortunately, in this case, it didn't have the follow through once it actually got into that trend line. Very often, when it does retreat into the trend line, it will come out with another signal, but that wasn't the case this time. So just be aware of that. If on your Falcon you've got a signal that's printing away from the trend line, you need to be a little bit more cautious. I think it's just a chop fest today, though, folks. They go a little higher, they try to go a little lower. And you can see everything just kind of wishy-washy. Good question, Mike. Mike asks, Eric, I'm wondering if the market is choppy today because of the storm back east. Many traders still not back at work. I'm thinking that's why it was choppy on Friday also. I don't doubt that the storm probably had something to do with it, but there's also a big FOMC meeting. Well, it was last week and this week. So it was toward the latter part of last week and the early part of this week. The Chinese bankers and the European bankers said their piece last week, and I think it's Ms. Yellen's turn this week on Wednesday. So we can probably anticipate the early part of this week to be very lackluster. Okay, so Jim is tweaking his Raptor a little bit. Here, hold on a second. We don't have much going on, so we might as well take a look at this. So he says what he's doing is he's using the equivolume bars along with a volume indicator on the YM, and he's marking the larger volume bars just one second while my YM chart is still loading. Oh, come on. My computer's giving me a little bit of grief this morning. Come on. Oh, come on. This is really starting to annoy me now. Oh, jeez, that took long enough. All right. So what Jim is suggesting is he's watching the equivolume and the large volume spikes. Now I think Jim may also be looking at a tick chart, so it'll be a little bit different here from the mean Renkos. But he's paying particular attention to the ones with the wide bars and the higher volume. The reason, I suppose, is high volume always occurs when the market is at a turning point. Right? High volume rarely occurs when the market is trending. So when you get those turning points, that's when the volume comes into the market. Interesting observation, Jim. I'll have to play with that a little bit later. Okay, so what was annoying me there is that we had a chance to buy, and I couldn't get out of my my update. So we had a red bar buy right here on the Eagle, and it looks like that's having a little bit of follow through to it. Gold is just dead sideways today. All right, so here comes the first micro macro cross. We're late on the signal. By that I mean we're not late on the first micro macro cross signal, but we're late relative to the Eagle. Now we're into macro pullback, and now we're into yellow bars. So there goes that trade. Where's my magic 8-ball? I need to ask it which way the market is going from here. Yeah, Jim says, one day of crystal ball is all he needs. One day of a crystal ball just to leverage up. Well, we're going sideways again. He says the Magic 8 Ball says, eat at Joe's. I'm surprised they still make that thing. I was going through the toy aisle the other day. Looking for something for our grandson, and sure enough, there it is, the old Magic 8 Ball. All right, let's try this one more time. We've got nothing going on here. So here we've got the red bar buy signal. Now you see the ATR is currently against our signal. What I want for the ATR to flip over. This bar, if it finishes at the high, it will flip the ATR over. See how it did that? So this bar now effectively becomes our signal bar. So I want to buy on one tick above the high of that bar. Oh, interesting question from Peter. Good morning, Peter. Peter asks, when you see a sideways action like today, do you lower the tick size, the brick size here, to pick up the trade quicker? I don't, Peter, but that's a very good observation. I could see that working, because what happens when you reduce the tick size is you end up producing signals a little bit faster. No, I stay with the defaults myself. I haven't really experimented with that very much, but I can see the logic behind it. I don't know if you were in the room earlier, but what we tried was, and successfully I might add, is we were established the range of the market. We said, okay, here's the high, here's the low. And so we sold the top end and we bought the bottom end. And we didn't get greedy. We just, took our profit when we had it, and that was that. If you identify a market that's going sideways, that's probably the best strategy, is just say, okay, if it gets up here, I'll sell it. If it gets down here, I'll buy it. And we're using limit orders to do that. And then just let them sort themselves out. The downside with this particular strategy is that if the market is in a breakout, obviously it's going to run your stops. The good news is you can usually run fairly tight stops. And you can even preset your stops if you want. So you can say, okay, I'll give the market that much room and no more. When there's a lack of a trend, this is very often the best way to go. But again, a very interesting suggestion on Peter's part. I haven't experimented with it, but I do see the logic behind it. All right, let's see if we get another retracement off of the high. And we're horsing around a little bit here. I haven't seen anything really promising this morning. The hawk has probably been the most productive tool. And that's because the profit objectives are that much shorter. And it does produce signals a little bit more frequently. So we had a first micro macro cross here, had a first micro macro cross here, both of which did have decent follow through to them. But it looks as though now we're going to get back to testing the bottom end of the trading range, which is going to put serious heat on our Eagle trade. And what I would be looking for at this point is one more effort on the part of the buyers, and hopefully this bar isn't it. See how we have this long wick up here? That tells me that the buyers tried to press and the sellers are starting to push them lower. I'd like to see one hollow body green bar just to tell me that the buyers have stepped in. I can roll my stops below there. I have a feeling this is going to get the stops hit again just because of that whole sideways action that we got going on this morning. Wow, Peter, that's very impressive. Peter said he did this morning, namely scaling down the brick size. And he went from a negative $350 to a positive $187.50. That's a lot of hard work, Peter. Well done. So I've turned off NinjaTrader now, and you have 100% of my attention. Okay. He says, I have the three birds, and I really like the hawk, but now I'm looking to buy the raptor, as I've not had a losing trade in 23 weeks. That's fantastic. Or a losing week in 23 weeks. He says, granted, 1 week I was up $50, but hey, $50 is still better than losing $50, right? Well done, Peter. Very impressive. Peter says he also loves the support and resistance suite. And today the market is pretty much skewered by the median line. A little bit of a bounce here off of the primary support. Very, very tight trading range. All right, so here on the Eagle, the buyers have recommitted, so I'm going to recommit as well. If the buyers fail at this point, well, then I'm on the wrong side of the trade. So what I'm going to do is I'm going to roll my stops, 2 bars back, 2 ticks off, use the bar high-low strategy, and pretty much just advance as the market advances. If it advances. We've got a little bit of a trend line going on here, or had a little bit of a trend line going on here. So we weren't able to reduce the risk a whole lot on that trade. You can see here on the Geiger counter as well, it's just very, very balanced. buying and the selling on either side of the equation. The dial just more or less stuck here in the middle. Jim says the DAX is falling off a little bit, so we'll see whether or not that pulls the market down any. So now we've got a first micro macro cross. Well, technically it was a macro pullback back here / first micro macro cross. Now we're into another macro pullback. It's just such a jumbled mess today. And now we're into yellow bars. And all these yellow bars and all this overlap just not making for a good day. Gold and crude oil both very quiet for the most part. Crude oil put in a little bit of a rally a little while ago, but not much now. Well, it's hard to say if anything is going to shake up. I honestly don't think so. Not much you can do when the market's trending sideways, I mean. Yeah, Ryman says here on the trade forecaster, took a long time to get into swing mode. I think the trade forecaster is a little bit out of touch today. We should be in full-on scalp mode. It's going to take the programming a little while to catch up here. The trade forecaster, I don't think accounts for FOMC meetings, which always tend to constipate the market. Yeah, here we are. Might as well just watch the Raptor here for a moment. You can see we're getting an earlier reaction. to this intermediate swing low. I guess traders are getting bored. They're trying to buy a little earlier, sell a little earlier. Yeah, see ya, Tony. I think you've got the right idea. There's not too much going on here today. We may cut out in about at quarter to the hour. We'll see how things shape up, but it's a lot like Friday's session, although Friday's session had a decent rally to start, and then it kind of hit the skids. Yeah, see you, Jim. Jim's up 152 ticks today. He says he's going to stay flat. I think that's a good call. You pull 152 ticks out of today's market, you're doing pretty darn good. All right, another first micro-macro cross here on the Hawk. A trend change signal on the Falcon. There might be enough room here to see the market try to drift toward the bottom end of the trading range. But honestly, nothing very enticing. I'm going to throw this on just for demo purposes. And what I'm doing is I'm simulating the entry from here. Right? I missed the actual signal, so the market retraced a little bit. I got a second chance at it. I don't recommend doing that. Again, I'm just doing it for demonstration purposes. We don't have much to watch. And what I'm anticipating is a move now to the bottom end of this trading range, which you can see is down here around 42.36, which is more or less where our break-even trigger is. Hence the attempt at the earlier entry. Good question here from Mo. Okay, Mo's asking about the Hawk. And he says, Eric, when the micro crosses the macro and heads up, is the first pullback the best percentage of an entry? And then after that, are the entries less? And I think what Mo is asking, are the entries less likely? All right, well, first off, Mo, if you don't have our cheat sheet yet, you can email me and I will send you the Hawk cheat sheet, which looks like this. And the Hawk cheat sheet highlights the 5 high probability Hawk signals that we look for. The first micro-macro cross, the macro pullback, 4-arrow consolidation, post 4-arrow consolidation, and then the red bar buy or the green bar sell. All right, so those are our high probability signals. Now, regarding the first micro-macro cross, so what we're looking for is the highest probability signal is the first micro-macro cross signal, and very often it will develop on a little bit of a pullback, but not always. The important thing is that It is the first signal that prints where everything is in sync after the micro and macro lines cross over. So you can see here we've got green bars, green trend lines, green filter, green signal. This is our first micro macro cross signal, just like that. So we would enter there and probably cover it down here. And oh, whew, had to work at it a little bit, but we finally got our profit objective. Here is a first micro macro cross signal that did not pull back. So it's still a first micro macro cross. It's the first signal where everything is in sync. So we have red bars, red filter, red trend lines, red signal. And I'd probably set it up like this. And you can see the market fell off nicely to the profit objective. So the pullback is not important in identifying the first micro macro cross. Sometimes it will pull back, other times it will not. Here is one where it did not pull back. So the micro line crosses the macro line. We're ignoring the yellow signals. This is the first signal where everything is in sync. So this would be the first micro macro cross signal. So again, green bars, green trend line, green filter. And you can see there was no real pullback there. The market just kept going off of that signal. It's a good question though. All right, so it looks like the Falcon signal did work out as the market traded into the bottom end of this morning's range. Not much more. Mo's asking on that first micro macro cross, that's a huge percentage play. Yes, it's accurate well over 80% of the time. That's why I'm always saying to you, it's the signal that I almost take without exception and without much thought. So here's the first micro macro cross right here. Now you're probably saying, oh, isn't that the first micro macro cross? No, why not? Because we're not all in sync. See, our macro line is still out of sync. So a few bars later, we get the signal where everything is in sync. And, you know, I'll take the signal, like I say, almost without exception. And we fell off enough to hit our profit target. Now, on a day like today, the first micro macro cross is going to work most times. Here's one where it did not work. It pulled back. This is an overlap. We've got the first micro macro cross and the macro pullback signal piggybacking on each other. The trade would look something like that, but you can see it didn't stick. It failed and started going the other direction. So as high a probability signal as it is, it unfortunately is not 100%. And when you have a ranging market like we do today, it's still a tough day. Okay, Peter posts a good comment here. It's a little bit long, so everybody pay attention. First off, Peter apologizes for so many comments. Don't apologize, Peter. It's the questions and comments that make days like this go by, because there's really not very many quality signals that we're seeing here at the moment. But this is a very keen observation on Peter's part. So he says, Eric, sorry for so many comments, but I would like to think that I can help out the group. I keep pretty good records. One thing I found is in the summer, I traded less and played more golf. Then winter came in, and I stayed at the computer for longer periods. It didn't help. I went from 7 trades a day back down to my 2 or 3 trades a day, and that's what really helped. And that is a huge, huge thing for traders to learn. Over trading is deadly. You know, we're all stuck in the factory mindset where if we can produce more, we'll make more money. And that is not the case. You want to find high probability signals. Trading is all about probabilities. Peter also says, again, the support and resistance lines really keeps the trades down. Today was different. I did 5 trades, 3 with the lower tick version. Yeah, great observation. Thanks, Peter. It's all about the numbers, folks. It's all about the math. Find those 2 or 3 trades a day that you're 90% sure are going to work out. Take the trade. Sure, one may eventually fail, but it's those sure things, and I'm using air quotes, sure things that you want to focus on. And then when you find that, get in there, take the trade. Even if you trade just one contract and you do your $50 scalp and you do that twice a day, you will make $20,000 a year. Most people never sit down and do the math and figure that out. It is true. If you find 2 $50 scalps in a day, you will make $20,000 a year trading single contracts. So there's scalp number 1. And where was the first micro macro cross to the upside? There's scalp number 2. Both of these hit their $50 targets. Both were high probability signals. Your day is done. And so you say, well, Eric, that's great, but I can't live on $20,000 a year. Okay. So what if you did 3 trades instead of, or 3 contracts instead of 1? That's $60,000 a year. Okay, getting a little bit better. Still not enough money. What if you traded 5 contracts? That's $100,000 a year. You know, unless you're living in Beverly Hills, $100,000 a year will probably keep the lights on. You want to earn more than that? Again, just take more contracts. Don't take more trades, take more contracts. Build your position size. If you're a really small trader, your first order of business is to build your account to the point where you can trade more volume. So if you're trading a $10,000 account, I'm sorry, you're probably not going to be able to trade for a living off a $10,000 account. But if you, say for a year, trade a single contract, at the end of that year, your $10,000 account is now a $30,000 account. That's substantial. $30,000 has a little bit of clout to it. You can start trading 3 contracts. At the end of the next year, that $30,000 account is probably just shy of $100,000. $100,000 account is considerable. You can trade serious volume with a $100,000 account. Hopefully you have the patience to wait 2 years or to work at it for 2 years to get you to that point. In the big scheme of things, I don't think it's that big a deal. Well, you guys, we might shut things down here early today. There's really not much going on I anticipate the market's going to keep retesting the highs and the lows. Right now we're bouncing off of the lower end. So it's probably going to try to head back to the upper end. Oh, a couple questions here. Sammy's asking, what's the use of the logic counter? What's the purpose? The logic counter are these numbers here, above and below the current bar. They tell me that if this bar finishes to the top side, the high of the bar will be 42.4275. The low of the bar, if it finishes lower, will be 42.3875. Why is that important? Well, you can see I've got a couple of warning dots here and a possible trend change signal. So I know that if the market continues higher, the high of the bar will be 42.4275. The hash mark will print at 42.43. So I can actually anticipate the entry. I can anticipate where the hash mark will print because I know it prints one tick above the high of the bar. Right, so if I know where the high of the bar is, I know one tick above there will be the hash mark. And if I expected this trade to continue higher off of this warning dot, then I could be ready for it. And I could, even park my order there. I could submit the order, have it waiting so that when the bar did complete, I would already be first in line with my order to go long. So that's where the logic counter comes into play. It's very handy for knowing where the hash mark will print once the signal finishes. Well done, Ryman. Ryman says in regards to lower profit objectives and just taking consistent profits, Ryman says that's what I'm trying to do. On the E-mini is take 10 ticks per day. My day is done. He says it's working good right now, and he's new to the Raptor, so welcome, Ryman, and I'll do my best to help you along. All right, you guys, the overlap sideways trading continues. We're going to call it a day. Expect more of the same tomorrow, I'm afraid, but maybe, just maybe, things will shake up a little bit. All right, I will see you guys then. We'll talk to you tomorrow morning. Bye for now.